Hi, everyone, and welcome back. So, today I want to talk about a subject that I actually get asked a lot about. And this is in reference to starting a business and understanding when you should or should not start filing a tax return for your business. So, let me give you a scenario. Assuming that you start your business, or rather that you register with your state as an LLC or as a corporation, excuse me, you register with your state, say in 2022. However, you don't actually start your business you don't actually open your doors for business until, let's say, 2 years later, which is 2024. So the question is, are you required to file a zero tax, or rather, are you required to file a tax return in 2023 or 2022, 2023, or before you actually start doing business? So assuming that you've applied for the LLC or for the corporation with the state, you've registered, and then you've also applied for your EIN with the IRS. Now, once you apply for your EIN with the IRS, one of the questions is going to be, what type of business entity are you? So you're going to either pick that you are a partnership, you're a multi-member LLC, you are a corporation, whatever you are. When you receive the letter from the IRS, you're going to receive a letter from the IRS, and they're going to say, okay, here's your EIN number, and we are expecting you to file a form, let's say 1120 if you're a corporation, or to file a form 1065 if you are a partnership. Well, from that point moving forward, the IRS is going to be expecting a tax return from you. So, excuse me, if you don't file a tax return, let's say in 1 year, even though you haven't started your business, you assume, okay, I'm not going to file a tax return because after all, I have no income. Well, you may receive a love letter from the IRS asking, hello, where is your 1065 or where is your 1120? Because even though your intention, or even though it worked out that you were not able to start your business when you anticipated, if that's the case, or if you just didn't have any intentions of starting it until maybe 2 years down the road. And when I say start your business, I'm talking about actually open up for business, where you're actually receiving money from clients, offering a service or selling a product. IRS has no idea what your intention is. So therefore, they are going to be expecting a tax return from you. So the question now becomes, all right, well, I registered my business with the state. I've gotten my EIN number, probably not going to start earning income from my business until, let's say, 2 years from now. I have all these expenses that I am incurring within those 2 years that my business has not opened to the public. So what do I do with those expenses? Do I file a tax return? And do I include those expenses on my tax return if I file one, even though my business is not up and running? I haven't really started it. So the answer to that question is, you absolutely want to file a tax return, because when you receive that letter from the IRS and they're telling you that they're expecting to receive a particular type of tax return from you, whether that be a 1065 or 1120, they're looking to receive one. So you will file a zero tax return because you haven't started your business. Okay, there is no money coming in. You have not yet set up yourself in a situation where you are open for business. So therefore, you will file a tax return with zero. In terms of the expenses that you have incurred over the 2 years, those are going to be considered either startup expenses or organizational expenses. Now, when you file your tax return for the years that you haven't actually started, you're not going to put those expenses on your tax return. Don't put them on your tax return. So you're going to file a zero profit and loss. Your balance sheet should be completely blank. So you're not going to put those expenses on your zero returns. Now, in 2024, when your business is now open to the public and you are now accepting clients and you're making money, then you're going to file a tax return for 2024. And all of those expenses, all of those startup costs and organizational costs that you incurred throughout the years before your business actually was open for operations is going to now become, it's going to go on your balance sheet as, you're going to capitalize them on your balance sheet as startup expenses and possibly organizational costs. And then you're going to amortize that over 15 years, usually 180, I think it's 180 months. So that is how that works. So basically, just to reiterate, if you have a business or you start a business, but you haven't yet opened up to the public and you're not receiving income from that business yet, and if the IRS is expecting you to file a tax return because they sent you a letter telling you that here's what we expect, you need to file a business tax return with zero. As for your expenses, do not include your expenses on the tax return. You will eventually include those expenses on your tax return when you file the return that shows income. Or not, well, I wouldn't say that shows income. I would say that you file the return based on whether or not your business is open to the public. Now, you may have, and let's just say that you open up your business and say, okay, I'm ready now. I'm ready to take clients. I'm ready to start accepting, money. Assuming that you don't make any money that year because nobody showed up, you can still, at that point, you can still file a zero return. You can also include your expenses on your return. And then you can also include those capitalized costs, startup costs on your balance sheet, even if you didn't make any money that year because no one showed up. However, you were open for business. Okay. Hope this helps. See you guys next time. Oh, don't forget to like and subscribe. And if you have any questions, feel free to click the link in the description box and set up an appointment. Also, one thing I have to say again is that this really, at this point, it refers mainly to CBD businesses and hemp businesses as it relates to those expenses, because, as a cannabis business, there are a lot of expenses that we are not able to take. So that doesn't change. So in the case of a cannabis business, those expenses are probably, you're probably not going to be able to take them anyway, whether as a startup cost or as a regular expense. So therefore, once again, this is mainly for any other type of business owner, CBD business or hemp business, because these businesses are legal on a federal level. All right, see you guys.